Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
It's a Friday. As I can hear you loud and clear. And boy, did the market roar.
Man,
What a day.
what a day, what a Friday it was. Pretty wild day in a bunch of different markets, and we'll definitely talk about it here. But welcome everyone to At the Buzz, our market recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we could take advantage of those opportunities while managing our risk. If this is our first time meeting, I'm Coach Jay. Been a Top Step performance coach since June of 2023, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some of my experiences, maybe some wisdom, and hopefully help you become a better trader.
Awesome stuff. Thank you for that. You're all our chat, our audience. Thanks for hanging out, especially on a Friday. Let us know how you did today. Were you up on the day, down on the day? Anything that you learned from the day? Jad Kalian says 5-figure day today. Great day.
Yeah.
I'll tell you about my day. My day was pretty much a scratch, and I have never been happier to have a scratch day. Accidentally got long the NASDAQ on the way down, was short the S&P, found myself in the NASDAQ short, and I'm like, how the hell am I in this trade? Led NASDAQ long and was able to trade it back and get back to scratch. But I've never been happier to be up $74 on a day.
There's an old saw from the trading pit days: is a scratch day is a winning day.
Yeah.
And you fought back. Good job. But be warned, I've done it. And if you're going to trade different markets, slow down. Make sure check. Just don't get click. I'm guilty. I did 10 minis versus 10 micros once. Cost me $6,000 in about less than 4 minutes.
Get expensive. It can get expensive.
Way to fight back.
Thanks, Coach. 4,500 on 3 combines. Aaron says was flat, ended up down 550 in the last hour. Made 500 on gold from a nice reversal today. And Bink in the chat says, might as well hit that like button on your way in. Bink, I cannot agree more. I already hit it. Did you? But we appreciate you all being here. Let's take a look at the news. Still in a government shutdown. We've had aides on both sides. A aide on the Democrat side said, hey, we proposed a deal. Aide on the Republican side saying we turned that down. So government shutdown still going on here. We did get some numbers. Today was supposed to be NFP day, but because it is, we are still in the middle of this government shutdown. Again, the longest one ever, 38 days. This is now the second NFP number that we are missing. And I'm just curious what they do. Somebody has the number. I'm curious what happens when the government finally opens it back up again, right? Do we get all of the information at one time? We've heard some Fed speakers this week talk about, hey, it's kind of hard to make a decision when you don't really have the data to support those decisions. So we will see what happens. We did get a University of Michigan sentiment prelim number coming at 50.3. Forecast was 53. Anything else you're seeing on the news, Coach Paul?
Relating to that University of Michigan index, it was a big miss, pretty negative news. And we had a knee-jerk reaction. And other than that, I enjoy these big numbers from the government. It just makes for better, from my point of view, a much cleaner read, less anxiety. But yeah, that Michigan number was a pretty big hit. Set off some selling that could, like we talked about before. We got the last seller in today, and
yes, we did.
Rally from there.
Yes, we did. Let's take a look at the quote board. 36 different markets we can trade with Topstep accounts, and today to the downside, we had natural gas down 0.76%, RBOB gasoline futures down 1.1%, and wheat futures, our biggest percentage mover to the downside, down 1.59%. We had that trend line. That trend line. Damn. Why was I trading the equities? Should have just shorted wheat and called it a day. To the upside, we had platinum up 1.13%, Soybean meal up 1.38%, and micro Bitcoin futures, our biggest percentage mover to the upside, holding on to that 100,000 level, up 2.59% on the day.
Jeez.
What's interesting, just real quick on this micro Bitcoin chart, this kind of looks like a bear flag, right? I don't know how you trade bear flags exactly, but we're making lower highs.
We're ranging into the middle of the big
Yep,
selling candle under the 200.
until the next volume comes in.
So we don't know. This is the one thing we're certain of is uncertainty. Trade it accordingly. I'm looking to sell this rally if I get a signal or an opportunity with measured risk.
Yep, I'm with you on that one. Let's take a look at our big four. We had crude oil up 0.71% on the day. The S&P up 0.23% on the day, which if you traded today, saying that the S&P had an up day is insane. It's crazy to think about. Gold up 0.49%, and the NASDAQ down 0.1% at the low of the day in the NASDAQ. We were down 2%. So what a rally it was to end the day. Let's take a look at the NASDAQ chart. Let's take a look at the weekly to start, Coach Paul. It is a Friday. What are you seeing on this weekly?
Nice. When we talked, is it a possible healthy selling in a rally? Yeah. Well, with that wick, and that wick is deceptive on that weekly. That was from this morning till this afternoon. Finished lower than it started, but encapsulated a healthy break. Does it set up to be a nice buy? I don't know. The trend is still higher, and it always pays to buy more stocks than it does to sell, from my experience. But still in an uptrend on the weekly. Anything else you see?
Yeah. So while we were selling off today, it was really aggressive. Like this, like you said, this weekly wick. That's the low. That was a low of today. Can anyone in the chat quote Coach Paul's when it comes to weekly candles? Because that's the one thing that came to my mind when we were down here. You probably know what quote I'm talking about, Coach Paul, but I'll wait in the chat to see who gets it. Coach Paul's quote about weekly candles. Who has it there? That's the first thing that popped into my mind down here. Let's take a look at the daily. Courtney, the MVP. Weekly candles rarely close without a wick on either side. So when we were down here, this weekly candle was, we were making the lows today. Today's a Friday, the end of the week. Popped into my head. Weekly candles normally don't close without a wick on either side. Could be anecdotal information, but when you see it play out time and time again,
well, it's a probability.
Yep.
And do it and make decisions from that. It's not an absolute, but it's good to know.
Great to know. Great to know. Taking a look at the daily here, Coach Paul. The October 10th candle, we talked about 50% of it, and we traded down there. Of course, this is the NASDAQ, so it's not going to trade there exactly. That 50% level was right around 24,775. Low of the day today in the NASDAQ, 24,709 quarter. We closed below the 20-day moving average yesterday. We talked about this yesterday. When we start to get acceptance inside of this candle, do we see that rotation down to the 50 or to 50% or both? And that's exactly what we got today.
What was the price of that 50-day moving average?
50 moving average is at 24,919. 24,919.
So and that's where we found value.
Mm-hmm.
And it is short covering now. Where do we go from here? I don't know. But what did we find? And we'll go deeper into this. I want you to go over what we talked about in the green room.
Oh, yeah.
Orders coming in right in that area.
Yep. So let's take a look at the 30-minute chart then. Last night, kind of quiet. The selling really started during the London session. But you can see we've been under the 200 moving average for a couple of days now. The 20 and the 50 are starting to get some separation. So, and this is a 30-minute chart, but some nice selling here. Again, last night's open, we could take a look at that. We'll mark off this 775 area here, and I'll take this off. This is the treasure map trade. Shout out to MP. But last night was pretty flat overnight, kind of indecisive. And then again, once London started coming in, they started selling it. By the time we opened up for the New York session, I think we were already down 1% or 0.75%. We go to an opening range, New York session opening range. We're under VWAP. Let's actually, I'm going to do this here, Coach Paul. Let's do your overnight volume profile, because we rejected right at point of control, I'm pretty sure, from the overnight session. Look at that. This yellow line here is the volume point of control from the overnight session, right? What I did was pull a volume profile for the overnight, and we did this yesterday as well. When we open up for that New York session, volume never trades above that point of control.
Wow.
And a really, really nice rejection there. This is
where have we seen that before?
Yesterday.
Yes, yesterday. Yes.
Just yesterday. This is quickly becoming actually one of my favorite ways to look at the markets coming into the New York session. So shout out to you, Coach Paul. Using that volume profile in addition to the 200 moving average on the 30-minute chart, and then VWAP for the rest of the session. Just a really clean look at the markets. Nice test and rejection of the opening range. Move to the downside. This is where I accidentally got long on this break here, and I'm like, fuck, I can't be in this long. I cannot be in this long. So then on the way back up, I had to fight back to get to scratch. $74 on the day. 775. Anything else you got so far on the morning session, Coach Paul? I know you were short the S&P as well.
Yeah. Well, we got down to, if we go at volume profile and go to the half hour and see how the volume dispersed or traded through the day. So if we start, bring up the half hour and bring the volume profile. Oh, and look what happened. It flipped down.
So this is the overnight here. I can keep dragging it through the New York session.
Yeah. So there it is. But take it every half an hour. Again, it's still there. Well, but you didn't move it. Move it one at a time. So
flips here.
Flips there. And I want you to, so now, by the way, that was the second, right around the second level of support. But more importantly, what does that reflect? Volume came in.
Yep.
And two things, that buying candle, that first buying candle off the lows was an outside candle. And one of the things is that was light buying volume takes out heavy selling. So what I mean by heavy selling, so we've had this heavy selling all the way to the lows, and this buying comes in and it's not big. So in our mind, we would think it'd be a big volume to buy, but I identify it more as the last seller came in. We don't know until after it happens, but this is evidence. And I want you to go over what you saw in volume when we were down there.
So I was on air with Dolby and Paul, and shout out to Paul, $12,000 day today, trading micros. Hell of a day, hell of a trader. But $12,000 day across two accounts, so $25,000 day. Shout out to you, Paul. But what we saw, and if you guys were watching TopstepTV during the 11 a.m. Central Time segment, we started to see a bunch of orders on the bid, starting with a 600 lot. And it was very interesting how those orders traded out, because it started off with a 600 lot up at 24,810. And when the market got close to that order, they pulled it. pulled it again, and then they started to get filled. And one order got filled at 24.8. I mean, actually, I'm going to see if I can pull up a chart that shows where those executions were. Give me 1 second here, because this is pretty interesting.
I'd say so. But I'm a trading geek, so
Yeah, same here, man. Same here. Uh, let me see if I can pull up these charts. But 760 was the last price. Okay, I have the chart up on this side. Give me 1 second, guys. I'll bring this up. Is it this one? Okay, yep, it's here. Let's move this over here. We talk about some of these bigger orders all the time, because and we say it's not about the order itself; it's about the market's reaction to the order. Right? I'm going to pull up a quant tower chart really quick here, and you can see these little orange boxes here on the chart. 1,000 lot filled, and again, these are what we're seeing in real time. Is somebody put out a 600 lot order at a 24,790s, I think it was the case here. Somebody market order sells to that. That's a passive buyer sitting there, right? Now we have another one down here at 780s, and then the last one, and if you go back and watch that hour segment, actually you don't even have to watch the whole thing. You can watch from 11:36 Eastern time to 11:50, right? Just watch that 15-minute period. We see the orders start to come in, and you're like, oh, that's a 500 lot. They get filled. There's another one. They get filled. There's another one. They get filled, right? So in this short time frame, it's 15 minutes, somebody's on the bid with 1,500 plus contracts. After that last one gets filled and we don't see any more of those orders, look at where the market goes from that last fill. Now, we don't know whether that person was buying to open, buying to close a position, could have been buying to close after this huge short that we had. But either way, if you're buying something, you assume that there's no more room down, right? You're either buying to open it because you're getting long, or you're buying to close because you're covering your short. Either way, we can see what the market's reaction is after that last one. So this is why when we say, talking about some of those bigger orders that show up on the depth of market, it's not just about, hey, there's an order there, and we can see one actually up here. I don't know what this is. Somebody has some size up here, 25 230s as we speak. But when we see some of these bigger orders fill, and again, I'm not trying to catch this low. Whoever can trade 600 contracts here, they create that low. That's not my job. My job is to see what happens once they're done conducting their business and then trade from there. And in this case, that meant a 400-point move to the upside in the NASDAQ. Really interesting to watch. Again, there's patterns in everything. We look at candlestick patterns all the time. For me, I look at patterns in volume, and that was a very interesting one, how it played out. And actually, I want to thank whoever that is if you're listening, because that gave us the flow to the upside that I was able to get back to scratch on the day, because I just got long with them for the rest of the day. So shout out to you if you're listening. Sorry that we keep calling out all of your big orders, but if you show them, that means it's there for the market to trade.
Well, they might want everybody to participate.
They might want us to know, right?
Yeah.
That they might want us to know. Well,
great pattern. And that was near, it doesn't even do justice, because that was, so that was right near the lows of, they were buying value right around that price. It was under the 50-day moving average on a short term after that heavy selling. In other words, it was on sale.
Yep.
And that's big size. That's institutional.
Yeah.
We can identify where institutions or big traders are buying in value, or maybe that was short covering. I don't know, but
I don't know.
We get fragmented information. We don't get the answer, but you can make good decisions. Doesn't mean they're all right, but you can take good decisions to lean on that information. Great job, Coach. Way to get back.
Yeah, man. Thank you. Ajaz in the chat says, that was insane. I was short when you were shouting out they got filled. I exited when that third one got filled. I realized anyone entering with that size knows something. Yeah, I mean, and again, some people say, oh, you don't know what their intentions are. No, I don't. I don't even want to pretend that I know. But I do know that every time one of those orders get filled, there is a pattern that plays out in the market. And I can identify that pattern. I don't have to be sitting at the desk at Goldman to say, hey, what are you guys doing here? Are you hedging? Are you net long, net short? I don't care. When you trade 1,500 contracts, I see a pattern, and that pattern a lot of the time is a push to the upside. Now, very interesting. Back the move to the upside. Now we talked about it. How many lots were those? It was about 500 lots on the way up. If you were watching around 1:40 Central Time, Dolby said, "Hey, there's a 1,200 lot on the NASDAQ offer. Do we think we found the whale? Is it the same person? And is it a coincidence that after almost 300 points, there's an offer up here for around the same size?" I'm going to say no. Also, when that offer gets filled, that set the low for the rest of the day. We pulled back into where that offer got filled, and this is why we say write down these prices when we say some of these bigger orders get filled. Write down these prices. That's this pullback to here is not a coincidence in my mind. But somebody asked me what tool this is. This is Quantower. I am using some of the volume analysis tools, similar to how people use Bookmapper. You can see where some of these bigger orders get filled. It is a paid tool, and you can use your TopstepX account with Quantower. So I'll show it because we can use it with TopstepX. But again, I talked about this during slow markets this week on Wednesday with Dakota. You don't need it, right? If you're watching Topstep TV, or if you can look at a volume chart, you'll see the volume pop up there as well. So interesting stuff here. Anything else you got, Coach Paul, on the equities?
Yeah, one last thing. Chemistry, amazing information. 1,000 thanks, coaches. With that, if you haven't already, smash the like button.
Hit that thumbs up button if you can. Do us a favor. All right. All right. Anything else on the equities, Coach Paul? We can take a look at the S&P. Nice short that you had today. Pretty much short the whole day.
Until we saw buying.
Right.
I didn't buy the low, by the way. I didn't make all my trades weren't winners. I tried to sell it again underneath, looking for new lows, but I gave it a short leash. And
yeah, good trade though.
In reflection, I only take one side of the market, but there was plenty of reason to take risk to buy it down there. We just went through it, so
yep.
Maybe I'll open up and do only those trades, right?
Right.
Only the winners.
Right. Absolutely. Just today, another example of why we mark out the high-low 50% of some of these news candles. Perfect tag of that 50% and bounce from there. Yeah, that's about it there. Let's just quick look. Russell closing below that 50. Tried to retest, traded down to the low of this October 10th candle, but still closing right at 50%. This looks heavy, but maybe we found some buyers down here.
Looks sickly.
Yeah, it does. Yes, it does. And then the Dow, the best, the performing the best out of everything. The Dow.
Well, it's holding it, but value. It's a safety play. You're never going to get fired as a fund manager for owning blue chip stocks.
Right.
So if you're looking for safety, blue chips are the way to go. But it's holding that 20. It's not getting liquidated. What does a weekly look like that in there? Only a flesh wound.
Yep. We could be right back to all-time highs next week. Just in time to start the I guess the Santa rally it'd be a little early, but yeah, we'll see. We will see. All right, let's take a look. And Joe said, you talked about a 12-point pullback strategy in slow markets. If we have some time, I'll go over if I can. We will see here. Let's take a look at gold on the weekly. What is this? The heck is that? What is this?
It's a range for ants. That's the weekly. Is that the doji?
That is the weekly. 108 points high to low on the weekly.
All right. So what can we infer from that? We're finding value here.
Yep.
The selling is subsiding, or the liquidation. Still, that double top sits heavy on this market to me. Do we go into 3 months of sideways action? Possibly, but from right there, we can surmise this. We found value. We
Yep.
close in the middle of the range too.
Yeah, we did. Yeah, we did.
Uh,
Rich makes a good point. It moved 100 points every day this week. So even though
by
this looks
way
like
of Omaha.
right, even though this looks like this on the weekly, there's a ton of opportunity here in gold. And maybe as a range trader, this is where you want to be because you have defined risk if the market is going to stay in this range. And again, if we look at the daily, it's been almost 2 weeks, a week and a half of the exact same prices. So interesting here in gold, sell it somewhere up near 40.40, buy it near 39.50s. Of course, anything we say here is for educational purposes only and information purposes. That's not trade advice, but it's kind of what the market has been showing us, right? Every time we get up to these highs, we reject. And again, we're like equidistant from the 20 and 50 moving average on the daily and just sitting right in the middle of that range. This is balance and
What?
a big enough balance to trade. Go ahead, Coach Wall.
It's a balance. And there are opportunities. And one of the things we review, so reviewing the action today, it was very balanced for how many days in a row. Or how many, the day was extremely, but I don't want to get people that we're giving trading, how to trade. We
No.
give our perspective. And remember, every trader has their own perspective. Every trader operates from their own evidence, their own interpretation, and then it's the conglomeration of that. Now, I know looking at a chart like this, I'm not going to do well, but I can limit my risk. That's what proper trading is. If you're a range trader, you should be eaten like an elephant here. But a lot of balance after a big break. We're over the 200, but we've been vacillating. We rarely do that. And that would make sense looking at that weekly.
Yep.
So let's frame out this week like we would do an opening trade, attach a VWAP to it, see what we get. Because this is an important area.
If we start to get volume outside of the weekly high or low, then, we could start to see some movement. But VWAP for the week is a flat line. It's a flat line. So gold is extremely comfortable trading these prices for now. And with that in mind, if you find yourself somewhere in the middle, be careful of getting chopped up. Some of the great opportunities are rejections near these highs. The thing about range trading, for me at least, is I don't try to define where the high of the range is. Personally, I would just let it turn. Right? Let it turn, and then I know where the risk is for that day because it's not always going to be perfect, right? If I could have said it was 40.28 and today it was 40.35, right? So it's not exact, but you guys get the idea there. Anything else you got on the metals, Coach Paul?
Billy is asking a question. Does the distance from the 200 on the daily raise any flags or not? Well, let's look. Yeah, we're pretty far. I mean, that does raise concern.
When's the last time we traded it? It was 2023. It's almost exactly 2 years ago.
Now, you're right. It does give concern because we're that far away. It gives possibility for a larger breakdown. But in that larger breakdown, we're going to have different distributions. So it is a concern that we're that far away and we've had topping structure. Now we're going into balance. Does it continue? One of the marks I look at is the 50-day moving average. Are we going to close it? Does the 20 cross the 50? But being that far, yeah, that is a concern. But it's not a major concern.
Yep.
Someone mentioned silver.
Yeah, Rich was saying silver is on the rare earth list, could impact if there's tariff chatter again. Thoughts? Very similar looking chart to gold from a technical perspective. On the fundamental side, if it's on that list and we don't get a trade deal, does that mean we just continue to rocket, make all-time highs? I don't even know if I want to play economist here, but
Go ahead.
I mean that's what I had. That's what I had. But you know, I don't know, right? If it's on a list and tariffs are in question, we saw what happened with copper. You know, tariff chatter is going to affect any of the markets that we trade for the most part, right? And all of the metals have been in such a strong uptrend that I'd be looking for a continuation on a breakout for now. What about you, Coach Wall?
We're in balance. 20 still over the 50. We held the 50. Now, two things we can look at: that 50% of the from the high to the most recent low, and close above that. We're not there yet. I think that would be, if we can close above that, we've got a really good chance of making all-time highs. But we're in the middle, and you know what they say, I heard it as piddle or fiddle. You call it tomato, I say tomato.
Yeah.
No, in the middle for a trend. Now, we did have we didn't hit the 50, but we had nice buying around it, which is the second time we've held that price area. Two things: close above the 20, then close above the 50% of this move, and we could really take off. But right here, I personally would stay away.
Yeah, same here. Same here. JQ in the chat says, "Do you guys even know how to trade? I have no idea what I'm doing. Eat day in and day out. No idea." Somebody's gonna clip that up and be like, "Hey, this is a coach." No, that was a joke. Do you know how to trade? If you don't, stay tuned to Topstep TV and to At the Buzzer and all of our other shows because we try to help people with their trading. Again, anything we say is not trading advice, but we do try to educate traders here. All right, let's take a look at crude oil. Bullet traders, you have a great weekend as well. Let's take a look at crude, Coach Paul, on the daily. What are you seeing here?
Look at those. Speaking of ranges for ants,
Right.
it might be too big for ants. Yeah, we're holding at 20 and slowing down. I don't see any urgency here, but we're still in a downtrend. So looking at that, buy low, sell high. Well, let's look at the half hour.
Let's take a look at the half an hour. Oh, what is that white line up there?
The high of the day. In a range. Now, we had nice movement last night. Now, if we take that from Shanghai, it's a little more urgency, but really, we didn't do anything until Shanghai came online. Some great buying right back. Now, we're in a downtrend. We reject the 200. We put a VWAP when it first touches the 200. We can get an idea if there's follow through.
Flow stopped. Flow turned, actually.
Yeah. So nice, if you want to be a fade trade, this is the place to fade if you have the patience and you have the process. That's the process I'd look at. I wasn't looking at crude oil today. But
Same here.
I'm looking at the flow. We're still in a downtrend. We rejected 200 opportunity.
And
We had
2-3
opportunity for
times this
those.
week.
If you wanted to buy, that was a 2-to-1 trade off the opening range breakout.
Oh yeah, yes it was. Definitely get a 2-to-1 here. And I think again, Crude is presenting opportunities still to range traders. I'm not looking at it. It's not first on my list because I think that we just have more markets presenting opportunity. But if you stay here and you have reasonable expectations for your trades, there are some pretty good trades here, right? Off this 200 moving average, that was if you sold it right at the 200 moving average, you didn't have more than 15 ticks of drawdown. The most you could have got out of that trade was $1, but that's still a pretty good trade. So presenting some opportunity.
Now we have to look at our new fifth wheel, natural gas.
Man, I let go of this one. This is the 30-minute on natural gas. I talked about this during the opening call. Actually, Coach Paul said, "Hey, I know we're talking about
I saw that.
I know we're talking about crude oil, but watch natural gas off this 200 moving average." Hello. The equities they were doing too much. They were presenting too many opportunities. But natural gas, what a move off that 200 moving average on the 30.
And what a move to it. Like we had that. But once again, I think we had urgency last night on the sell side. After that rally from yesterday.
Yep.
So let's put a volume profile on yesterday's action and then measure it against the volume profile from yesterday.
Coach Hoop, I saw you said you traded natural gas in the chat. Did you catch that trade?
Coach Hoop.
Shout out to Hoop.
You do the natural gas cattle spread? All right. So look at that rally came late yesterday, so volume couldn't catch up. So there was a lot of air.
Yep.
I would consider that short covering. But as we developed today, look at the flatness of that volume profile with VWAP leaving the range. Now, you might, to me, I'm getting because beginning it's fragmented. We have a little bit, we get more information, but when it breaks out of that opening range with the VWAP, you get some great information. And then once again, what happened? The volume flipped to the downside. We got a rally off of that.
Great opportunity in this market, and this is a mover percentage wise. Natural gas was down 0.85% on the day. At one point at this low, I think we were down almost 2%. Really nice bounce off that 200 moving average on the 30-minute. On the daily, I'm still looking at this white line up here as a target. I feel like it's not a if, but a when. But of course, I don't know anything. So I'm going to trade the markets when they present them to what they present that day. But today presented really nice opportunities into the 200 moving average on a thin market up here at these highs. Like Coach Paul said, we rallied pretty strong, and then look at the volume profile here from yesterday. It got very thin up here. All the volume is down here. Trade right back to point of control, right back to that 200 moving average, and nice bounce from there. So good trade. Any other markets we want to talk about, Coach Paul? It is a Friday. Do we want to give people back their time, or any other markets you want to talk about?
Let's ask the crowd.
What do you guys want to see? Any other markets that you guys want us to talk about? Any topics, any questions that you have for us, or do we talk more next week? I know Joe had let me see if we can do this for Joe. Coach Hoop saying, look at the NQ Dom. What's on there? What's here, Hoop? The 10-year.
Billy, 10-year.
This is the daily. What are you saying here?
Still over the 200 and trading in a range. And I've stopped trading it.
Yeah.
But you know what? I mean, it's neutral. But now we look at the half hour. and then we can go through our process again.
Yeah,
So,
that's a nice trade.
what's that white line?
That is the 200 moving average.
Wait, we just saw that, didn't we?
We did. Where do we see that? On the every other chart that we looked at today. I don't know. In this case, the read I would have here is we have price trading at the 200 moving average, but where is volume? And volume is staying above, right? In this case, yesterday we had price trading below the 200 moving average, volume trading into the 200 moving average, and then it stopped there, right? Here's another one. It's not going to provide information every day, but that's a nice trade, again, off of that 200 moving average where it's held a couple of times, volume stayed above, so no one's actually trying to sell it into it. You could get a pretty nice trade here. That's a 0.25% move to the upside. If you trade the 10-year, someone asked for the 30-year, maybe a little bit more, a little messier here, but all of these markets are in balance right now. So kind of hard to trade here. All right.
Jazz trades. Jay and Paul, if you're up big on the day but continue to see setups, do you continue to make yourself available to the markets or lock out? That's a really good question. And I'll give you my perspective. This is where experience comes in. If you're confident and you're executing your plan well, like you just said, it shows me you have confidence. You see setups. Well, what's involved in your setup? But the structure of the market, the information that's coming, and your risk management. If that setup comes and it's part of your structured plan, then you can take risk. Don't get caught to I have to be right and not give anything back. So we talked before, predetermining your risk, accept it or don't take it. If you're not confident because you don't, and you're in the back of your mind, I don't want to give anything back, my suggestion is don't do it. But you can put it in a practice account and build some evidence. Like, okay, I should take this. And then you're going to trade with more confidence. The danger in doing that, what you just described, is if your front of your mind is you don't want to give anything back, you're not really going to accept that risk, and you're really vulnerable to tilt. How about you, Coach Jay?
I like there was a follow-up to that. AJ said I grabbed 420 points from MNQ today, but gave back 50 points in chop. You only gave back 50 points. So at some point you realized that your reads maybe weren't aligning with what the market said, and then you stop, right? So that's great awareness, right? Unfortunately we don't get to choose exactly when the market's going to present an opportunity to us, but we can sit here and scan for it. Whatever trading strategy you have, like if I'm an opening range breakout trader, there's only one of those a day. So unless I have another setup, I probably only have one trade a day. But if you start to realize that you're not reading price action well, then yeah, you made the right call, locking yourself up. Some days you read the market so well that you want to continue trading, right? Because hey, this price action is what I've seen that has paid me the most when I execute well. One of the things that I told one of the VIP, I can't remember which VIP season it was. I think it was last season. They started to ask like, hey, how many trades a day should I do? Or, should I stop myself at 3 trades or whatever it is? The answer is going to be different for everyone. So what I said was you should take as many trades as your process and your mental capital allow for, right? So if it's a process-based trade, and your mental capital says you have your mental capital and your actual capital say that you can take the trade, then take the trades. But if you start to feel drained after making decisions, we saw Braden yesterday hold on to that short, and he said, I'm going to go take a nap. He made $6,000, but he's like, man, that was rough. I'm tired. Right now, he read the market really well, so he could have continued to trade, but mentally he said, hey, you know what? I'm probably getting into a mental state where I'm not making the greatest decisions. So I think do that check in with yourself. But taking 370 points out of the NASDAQ. That's a great day.
Yeah, and another thing is, I'm starting. The way I hear it is, I would like some certainty to take the next trade, and that's the trap. Is it worth it? Is it worth taking risk? Is it in my structure?
Yeah.
All right.
All right. JQ in the chat who asked if we even know how to trade, asked what our trading plan is. I don't have one. I don't know how to trade. I just look at lines on the chart and the line's going to tell me what to do. What's your trading plan, JQ? Come on the show with us. Come on the show with us. Whatever your plan is, you're taking payout, so it's working. And I'm just joking here. We're having fun on a Friday. We talk about trade strategy all the time. Using the moving average is part of that strategy. But sometimes the squigglies say buy, sometimes the squigglies say sell. And that's
And do
about
it
it.
with do it with consistency, because that leads to a question here from Billy. Um, come back, Billy. All right. Where did it go? Okay, I've been getting the XFA execution fear. Maybe I'm being too discretionary right now. How do you react to that, Coach Jay?
That's awareness, first of all. But XFA execution fear, maybe I'm being too discretionary. Yeah, that I think that's good awareness. And the XFA execution fear is a real thing, right? When people start thinking about, oh man, this is real money. I'll be able to take a payout. Uh, if I lose the account, I'm gonna have to start over and go back. That's a lot of mental capital spent on a bunch of things that have nothing to do with your trade execution. So maybe you are being a little too discretionary. But what I would say is, you have to have some skin in the game to pull anything out of the markets. If you feel like you're being a little too loose with your trading, uh, write out a checklist and say, for the next week, I can only take trades that fit most of this checklist. Not, I want to say all of it, because then you're never going to take a trade. But uh, you know, review what your process is, because sometimes what might happen, Coach Paul, is we trade well in a combine, we get to the XFA, so we think, okay, we're trading really well, and then we don't have to review the process, right? Most people want to make changes when things aren't going well, but when things are going well, you need to every once in a while check the manual to say, hey, am I still aligned with that process? So I would say do that with small size, um, and manage your risk. What would you say there, Coach Paul?
Um, one big thing. You say you're getting too discretionary, and frame that out. What discretion means? You're two things are probably happening. You're in an XFA and you don't want to blow it. So you're going to trade with less confidence. And this is, by the way, this is happens to about just everybody who gets in an XFA. You're going to hesitate because you're going to get to a point where I just want the winning trades. Then you go discretionary. So what brought you there? Was it, and review it, you must have had a process.
Get back to that.
Go. Keep looking at the process. Make sure we do the check downs. If it's not fitting in your plan, don't take it. That's what discretionary is to me. And it just takes a couple of those. And the next thing you know, what happens? You're chasing the loss that you made outside of your plan, and everything comes tumbling down. So what I will say is you recognize it. That's a big step. But write it out. Put it on your monitor, whatever that your plan is. If it doesn't hit set those, then it's discretionary, and you don't want to get into the discretionary part.
There you go. There you have it. What's the best way to overcome this particular issue? I also suffer from fear of not blowing up. I just reduce my size. Sometimes I am just trading one micro and lock out at $200 to $300. You just overcame it. You overcame it, right? So it's funny because we hear a lot of people say, "Hey, I reduce my size all the way down to one micro. I'm making $200 to $300 a day, and I'm locking myself out." When you're in the mall and you read in the directory and it says that you are here, this is where you are in your trading journey, and that is 100% okay, right? There's nothing wrong with trading one micro. Coach Paul, you've been trading for 40 years. How many micros did you trade in the S&P today?
Oh, one. One.
Was there any sweat on that trade?
No.
And you're completely happy with the result?
Yeah.
And you'll do it again next week?
Yeah. Here, I just want to. You're making $200 to $300 and you locked out. Well, good on you. What's the size of your account?
Right.
And think of it this way: if you're doing consistently, if you make $200 on average in a month, that's your goal.
Right.
If you have a job and you're getting paid, quick math for everyone, you're getting paid $200 a day. How much are you making a year?
$200 a day.
Yeah, it's just
Trading
$1,000 a
times
week.
Yeah, $1,000 a week, 52 weeks. And I mean, we're talking about average, where some days you're going to have more. Obviously, there's losses in trading as well. But yeah, if you can average $200 a day, 50-ish K, yeah.
And remember, we're just starting here.
Right.
You're building. First of all, you're here to learn. If most of them, 90% of the people that are in combines are learning, if not more, right? And it's okay to learn. You learn. I think you learned something. You made that statement. And now you're asking questions. Should I double up, triple up?
Right.
Well, I would say if you consistently do that, if you're on one micro, guess what? You get to scale up. You can go to two and be comfortable. Let me ask the audience: when you have too much on, how is your trading decision matrix? What's the first thing on your mind if you're over leveraged?
I have to get out. I'm going to take profits as soon as I can. I measured for 100 points in the NASDAQ, but I have 6 right now. 6 is good. I'll take those. And then it goes the 100. And now I'm frustrated because, damn it, I knew it was going to go 100. That would have been the big trade. That would have been the one that made it. I would have made, I could have posted it on social media, been this big trader. But there's just too much mental anguish because you've had the opposite side of that happen too many times where I'm over leveraged and then it blows up. So now I'm afraid of the next time that's going to happen. We talked yesterday about being able to trust your own decision making. Most people,
Yeah,
if you've been doing this long enough, you have a strategy that you can implement repeatedly every day where you have a fairly good read on the market. Position sizing is the issue for 99% of people.
yeah. Like I said, if you put a micro on, and I'm not saying you just, to me, if I'm trading different, I'm going to sling 10 micros in 10 different places if I see the opportunity. But some days I might just do one or two. I mean, a large majority is that. But that's my style. Is I want a bigger move on a smaller position. If I'm over leveraged, I guarantee you I can't hold on. If everything becomes magnified, okay, we had this self-sabotage, ignoring exit rules, fearful trading. I love these answers. Yeah, we've all been there. The secret is to get it on enough size that you could walk away, put your stop in your bracket in, and go do something else. If that's where confidence comes in, all right, then you can build. Here's a better way: is build an account and then do bigger size. That's really the way to do it. So keep up the good work, follow your process, do what brought you to the dance. You double the account. Let's say your account is now doubled. Now, guess what? If you've done that with micros and your process is good and you're checking that you're staying in your process, you have something that you can leverage. If it's too big, you can't leverage. You've already leveraged, and that's really kind of gambling. But guess what? You get to scale up. Now you do two. Now you go from average. By the way, it's not every day, but average. If you go to the average of 400 a day. But you have to work to that. You have to get in the gym, right? You got to put some work in, and you're doing it. So don't feel like you have to. I would put it this way: when you're running in a race, that you have to be with the leaders if you don't have it in you. I did, by the way, I did that once in my 40s. I ran a marathon, and I thought, man, I'm a runner now.
Yeah.
And it was a 5K the next spring. And I decided, I've done a marathon. I'm going to go run with the leaders. Less than a mile in, I almost passed out. I barely finished the race and I threw up. I'm not kidding you.
Man.
So maybe that helps you. You don't have to be with, but if your job is to execute it and finish and be happy and execute the plan, yeah, you can leverage that.
Absolutely. Man, good
It
conversation
wouldn't be
here.
like me trying to run with Coach Jay. It's not going to happen.
These days, I don't know, man. I haven't run in a little bit, but the last time I did run a 5K, I ran with my younger brother, and I had to try to show him up. He beat me, but I was closer than I thought. He's half my age, so I took some pride in that one. But yeah, Genius Monkey says I'm very, very happy. Good stuff. Someone wanted to ask a quick question, and we'll get out of here in just a minute. I'm going to switch back over to the Quantower chart. What was the question? Abdul, when you say how the market reacts to a large order when filled, you mean other institutions accumulate on the other side? So honestly, this could be a full class in its own, but what I'm looking for, and you can see, and again, you could use a volume chart, you could use Bookmap, whatever it is. I use on Quantower what's called power trades here. There's a lot of it's funny now. There's a lot of videos I've seen on social media recently of and shout out to the traders that are doing it because I love the videos because they're looking at the exact same thing I'm looking at, but using big trades on Motive Wave, it's the same exact thing. But we're looking at where some of these big orders get filled, and then basically what I'm doing is, so Coach Paul and I have been using a one word in our conversations talking about trading this week, and it's flow. Reading the flow once an order gets filled, right? So some of these bigger orders here, in simple terms, I attach a VWAP to it. What is the flow since this event? Flow is to the upside, right? This is an event. Somebody traded 1,500 contracts in 15 minutes. What's the flow from that event? If the flow continues to the downside, then my job is to get in the flow to the downside with limited risk. If the flow is to the upside, my flow is to try to figure out a way to get into the flow to the upside. But that's a elevator pitch version of it. Trade entry and stuff like that. If you watch Slow Markets on Wednesday, towards the end of Slow Markets, I explained a little bit about the trade entry on a trade like this. But again, I think that has to be its own class. I don't know if we could explain it that quickly, but anything else you got, Coach Paul, before we go?
That's it. This weekend, give yourself an hour to review your trades. Put the trades that you made, your performance, put it next to what your plan was. Take no more than an hour. Start identifying patterns of where you're doing it right or doing it wrong. When you can do that, you're on the path to improvement. So enjoy your weekend. And we go at it again next week, Coach.
We will go at it again next week. Enjoy your weekend, everyone. I think Coach Hoop is still doing his class in Discord at 6 p.m. When and where do you teach classes? Here every day at the buzzer 4:15. But this one might just be a separate recording. I'm trying to decide whether or not that's what I do with this information. But this would be a standalone. I'd probably just record a video and then give it to the Topstep team to put it on the Topstep YouTube page. But we'll see here.
But first, you got to get 300 likes.
300 likes. We got to get 300 likes. And I think we only have 400 people watching here. So that might be a tough one today. But we appreciate you all being here. High volume. What's one thing you would tell yourself if you could go back to the beginning? I would tell myself that I do not know everything. But I'm willing to learn. All right. What do you got?
With that, we'll end it. That was awesome.
Let's end it there. We're out of here. Have a great weekend, everybody. See you next week. Bye.